Everyone, welcome back. If you've been tracking the housing market lately, you might have noticed a curious and honestly a pretty telling new trend. More and more home sellers are quitting, not selling, not lowering their price, but flat out delisting their homes from the market altogether. Now, think about that for a second. Let that sink in. We're in the middle of what's usually the peak home selling season. Inventory is rising. Buyers have more options than they've had in years. And yet, instead of adjusting their price, many sellers are simply throwing in the towel, calling it quits. So what's going on here? Is this a sign of panic, a power move, or maybe a hint that we're entering a new phase in the housing market? Today, we're going to be breaking down the rise in delistings, the market being hit the hardest, and what this all means for both buyers and sellers heading into the second half of 2025. So let's get on it. So first off, how bad is it? So according to Realtor.com, delistings nationwide surged 48% in July compared to a year ago. In terms of volume, we're now seeing about 21 homes delisted for every 100 newly listed. That's a big jump up from 13 delisted homes per 100 back in May. And when you zoom in on some very specific markets, the trend gets even more dramatic. So for example, in Miami, there were 59 delistings for every 100 new listings. That's more than double of what it was just a couple of months earlier. In Phoenix, saw 37 delistings per 100 listings. And in Riverside, California, my backyard, that number was 30 delistings for every 100 listings. This isn't just a blimp, this is a growing coast-to-coast standoff between what sellers want and what buyers are willing to pay. So why are so many homes being pulled off the market? Well, let's break that down. First, many sellers are still anchored to pre-era pricing. They remember what their neighbors sold for during the real estate boom, and they're not budging from those numbers. Even if the market has shifted, they still believe their home is worth top dollar. Second, buyer resistance is building. Mortgage rates are still high, average 6.72 on a 30-year fix as of late July, and the prices staying stubbornly high. Affordability has become a major issue. Add in inflation, insurance hikes, and property taxes, and buyers are simply, friends, they are tapped out. Third, homes are sitting longer. We're seeing more price cuts, more stale listings, and frankly, a lot more frustration on both sides. And finally, there's the strategy factor. Delistings, it isn't always about desperation. Some sellers are pulling their homes so they can make upgrades, switch agents, or just wait for the next wave of buyers to come walking in. And as one expert told Fortune, this is often about timing, not panic. We're seeing right now is a classic case of market in limbo. On one side, you have sellers who don't need to sell. Most of them locked in record low mortgage rates during the pandemic, even some in the area of 2 to 3% range, and they're sitting on a massive amount of home equity. So they're not under pressure, they're not upside down, and they're certainly not desperate. That gives them the luxury of time to wait, to walk away, or try again when the market feels much more favorable. And on the other side, well, you have buyers who are cautious, borderline skeptical, and they're looking at higher mortgage rates, higher home prices, and the rising cost of living, and they're thinking, boy, is this really the right time to make a move? And the truth is, well, they now have options. Inventory has climbed in every major U.S. region, and buyers are now having more choices than they've had in years. But with all those choices comes hesitation and the growing unwillingness to overpay just to get into the game. So what happens when sellers won't budge on price and buyers won't stretch the markets? Well, you get exactly what we're seeing right now. A slow, a quiet, an uneasy cooling of the housing market where listings linger, deals fall through. And that gap between buyer and seller expectations just keeps getting wider and wider. So what does all this mean as we head into fall and winter markets? Well, traditionally, activity slows down in the second half of the year. Fewer homes go up for sale, and many buyers are hitting the pause around the holidays. But this year, we're entering a seasonal slowdown with a little bit of a twist. A larger number of homes already being pulled off the market early. Now, this could mean an even tighter inventory this fall, especially if more sellers choose to wait things out until spring 2026. Now, on the flip side, if the mortgage rates start to inch downward, well, we might see a little surge in buyer activity, especially for those that have been sitting on the fence. Bottom line is this, friends. Whether you're buying or selling, it's important to be strategic about timing because this fall may offer some surprising opportunities on both sides of the deal. Now, if you're a seller watching all of this unfold, this is really what you need to keep in mind. This is not 2021. Again, I'm going to repeat this. This is not 2021. If your pricing is still based on peak era numbers, friend, it might be time for you to recalibrate your pricing compass. Start by looking at what similar homes in your area are actually selling for right now, not what they were listed for a couple years ago. Work with a real estate agent who's tapped into current buyer behavior, who can help you market your home much more competitively. And if you're thinking about delisting, ask yourself this: what is the plan? Are you going to wait it out, make upgrades, rent it out, or relist later with a whole new strategy? Sellers who are realistic and proactive are still finding success even in this cooling market. And for buyers out there, okay, yes, the market still has challenges, but it also has some opportunities. For the first time, you've got more homes to choose from, and you're in a position to negotiate, especially on properties that have been listing. Sellers who may not want to drop their price might be open to covering closing costs, offering rate buydowns, or including repair credits to sweeten the deal. Also, keep your eye on homes that were recently delisted. In many cases, they're going to come back with new pricing, updated features, and if you're ready, you might catch the seller in the exact right moment. So stay pre-approved, stay informed, and be ready to move when the timing is right. So what are the implications of all of this? Well, for starters, this could be the early stages of a price correction, not a crash, but a rebalancing. If delistings continue and inventory keep rising, especially with active listings now over 1 million nationwide, buyers soon hold the upper hand. Now, this means sellers will either need to adjust their expectations or get comfortable sitting on the sidelines for a while, and we're already seeing this. 20.6% of listings had price cuts in June, more than any other June in the last 8 years. In cities like Denver, over 1/3 of listings have dropped their asking price. Meanwhile, cities like Cincinnati, Sacramento, and Miami are posting some of the biggest year-over-year price declines. All of this points to a market that is evolving, and it's evolving quickly. And if you're in the market, whether you're a buyer or you're a seller, it's more important than ever to understand where things are headed before you make your move. So the bottom line is this: what we're seeing right now is a classic real estate standoff. Sellers are sticking to their prices, anchored to peak era expectations. Buyers, well, they're on the other side, holding the line, refusing to stretch their budgets in a market that feels overpriced and uncertain. And the result, a market that is not crashing, but definitely cooling and recalibrating. So if you're a buyer, this could mean more leverage, more inventory, and better negotiating power as we move deeper into 2025. And if you're a seller, now is the time to take a hard look at your pricing strategy and be prepared to sit tight for a while as conditions shift in your favor. Either way, this tug of war between price expectations and buyer reality is shaping what comes next. And we're going to be right here to help you navigate it. Well, friends, that's all I got here for you in this report. Thanks for tuning in. If you found this video helpful, don't forget to hit that like button, subscribe, and hit the notification bell so therefore you never miss an upcoming market update. And if you have questions about buying or selling in this market, well, I'm a licensed real estate agent right here in California, and I'm happy to help. With that said, well, heck, I'm going to be shutting off the cameras. I will see you in the next one.